As 2019 began, investors were still reeling from the year-end sell-off in stocks, which declined 14% from October 2018 to year-end. However, all was forgotten when Federal Reserve Chairman Jerome Powell announced on January 4th that low inflation would allow the Federal Reserve to be patient when considering raising interest rates. This one word, patient, was all investors needed to reverse course and begin buying stocks. When the first quarter of 2019 ended, stocks experienced one of the best starts to a year ever. The S&P 500 index was up nearly 14% in the first quarter. The tech-heavy NASDAQ composite was up 16%, and international shares were up 10%. Despite this great start to the year, not all is well for investors. Many remain concerned that slowing growth in Europe and China will eventually lead to a global recession. In fact, investors are so concerned about Europe that German 10-year bond yields are now negative. That's right, you pay the German government to own their 10-year bond. As crazy as this may sound, this is what happens when investors believe a recession is on the horizon and they seek safety in government bonds. So what can investors expect going forward? First quarter 2019 earnings expectations have declined to the point that upside surprises are likely. Expect a lot of back and forth in stock prices for the balance of 2019 as investors digest a mix of good and bad news. Ultimately, we believe recession fears will subside and patient investors will be rewarded with further gains in stock prices. From the HM Capital Management team, thank you for watching.